Welcome to Finscale, a podcast created by Solène Niederkorn, shedding light on innovation in finance, banking, and insurance.
The remarkable journey of eToro. Yoni Assia, CEO and co-founder of eToro.
When we started, we were one of the only, the term fintech didn't exist in 2007. One of the very few online companies in the financial services investing space. This was really just the beginning, right? So when you think of 16 years ago, remember, this was also the beginning of Facebook and Twitter. So it's not that surprising. Most online, there weren't a lot of large scale online brokers, especially not that are global, right? You had local ones in local countries, but very few global ones. And initially our approach was very much performance marketing approach. So we said, let's build the platform. Let's start market the platform in a lot of jurisdictions at the same time. And let's see where do we see the maximum amount of actually customers coming into the platform.
In this episode, Yoni delves into the world of social trading platforms. He explored the concepts of copy trading and its origins, shedding light on the associated risks and effective risk management strategies. We also discussed the impact of regulatory compliance on copy trading activities, highlighting key consumer protections regulations. Yoni provides insight on evaluating risk and making informed investment decisions. Additionally, we touch upon CFD trading and its appeal as a leverage trading practice. Shifting the focus to eToro, Yoni takes us through the history and background of the platform, emphasizing its Israeli roots and their contribution to the democratization trading on a global scale. We get to hear about eToro's growth journey, including notable acquisition, marketing strategies, and expansion plans. Lastly, we address the SPAC deal cancellation and explore the timing consideration for a potential IPO. Enjoy the show! Hello, everyone. Hi, Yoni.
Hi.
I'm really honored to have you as guest. It's a great pleasure for me to invite you on Finscale.
Thank you for having me.
Yes, you're here to help us dive into the fascinating world of social trading platform and copy trading. And before we proceed, I would like to thank François-Xavier Copé and Emmanuel Sackman for their kind intro. May I ask you a brief introduction from you?
Sure. I'm Yoni Assia. I'm CEO and co-founder of eToro. We started eToro in 2007, so 16 years ago, with the vision of opening the global markets for everyone to trade and invest in a simple and transparent way. And I've been passionate about the world of both investing, trading, as well as technology since I was very, very young. I started trading when I was 13 and started developing and programming when I was about the same age. And I've always been excited on the intersection of finance and technology.
Excellent. But you've always been an entrepreneur? Or did you work in big corporates, firms, and banks?
I started actually working in technology as a programmer, when I was about maybe 15, 16, building websites. I then, alongside the fact that I was a bit of a young trader, and then I joined the Israeli Defense Forces in basically the intelligence corps as a programmer. So I had a lot of the experience coming from the IDF, learning how to develop large-scale systems. Mm-hmm. And as I ended my service, I actually joined as a co-founder another company called CD Ride at the time, mm-hmm. Which actually developed cameras on roller coasters. So when you came off a roller coaster, you could buy a DVD of your entire ride.
Wow.
And 3-4 years later, I started eToro. When I was about 25, we started talking already about eToro and co-founded eToro with my older brother, Ronen.
Okay, so two brothers working together. I didn't know that. Perfect. Thank you very much. So as I said in introduction, there is a lot to do with copy trading. I think people know what copy trading means, but when we go into the details, I believe that people are not really aware of what it really means and where it's coming from. So can we start by this very simple question? Could you please explain or re-explain to us what copy trading is and who has been starting implementing that kind of asset management?
So I'll give you the story from the background of eToro. So when we started eToro, we wanted to re-simplify the user experience for accessing financial markets, right? So back then in 2007, everything was still download executable applications on a desktop. Most people who access then the stock markets and capital markets were traditionally mass affluent, a bit older usually, because you have to have at least like $5,000 or $10,000 or euros to actually have a portfolio of stocks and actively trade. And the actual user interface of a lot of those platforms, still by the way today, that are operated by the banks, is a very non-intuitive, very complex user interface that assumes you have a lot of time to learn how to operate. And so when we started eToro, we said, we want to simplify the access to financial markets. We want it to be as simple as buying a book on Amazon, to be able to buy shares of Google or of Facebook. And as we started, because this was also in the beginning of social networking, we added a lot of elements of social networking from the get-go. And 2 years after we started, what we realized is that the most engaging element actually in our platform was people talking to one another, constantly asking each other the same questions, which were, what are you actually trading right now? Are you still holding that position that you actually opened 3 days ago? And it was like this place where people talked about their portfolios. So at that point, we said, okay, let's actually wrap the entire investment platform in a social network where all of our customers can share automatically their portfolios, their trading activity, and everybody can actually see the portfolios of everyone. And therefore, they don't need to constantly ask, what are you trading? Because everything is transparent. So that's really when we became what today is the largest social investment network in the world. We have 32 million registered users on the social network where they can trade commission-free stock trading. They can trade from 20 different capital markets, cryptocurrencies, commodities, ETFs, etc. within a social network, so everybody can actually see what other people are doing and talk to them. So you can go to the Apple page and see other people talking about Apple, make an analysis of Apple. You can ask them questions, and you can actually go and see their actual portfolio. Then in 2000, I think it was 11, we launched the patent technology of copy trading. And that's where we sort of invented the concept of copy trading, which enables our customers not only to see, follow, and talk to people about their portfolios, but with a click of a button, so you can open an account, download the mobile app of eToro, open an account, fund it with $500, and you can either buy a stock for $500, or you can see someone's portfolio that generated, let's say, 15 or 20% returns on average over the last 5 or 10 years now, and you can copy him. And what that does, it copies his entire portfolio into those $500. So let's say he has 10 stocks equal weighted in his portfolio. He'll open these 10 stocks, $50 each on your $500. And every time he trades, it will trade in your account at the same time, the same price, and the same portion. Okay. So what very much like the concept of the sharing economy, very much like, an Airbnb or an Uber for the taxis or the hotels, we brought that concept into portfolio management. We said the most important thing in finance and especially in investing is information, and being able to look at what other people are doing and how other people are able to beat the markets or to continuously generating returns. And instead of simply just looking at what they're doing and learning from them, you can actually now automatically copy them on the platform. And I used to joke that just like the same way that I was very successful in high school, the best way to be successful is by copying the best people around you.
Yes, correct. Thank you very much. So there is an interesting thing because I have a past. I told you I have a past. In my early career, I was managing portfolios for a bank, within a bank, and for clients, so private clients. There is, in that sense, transfer of responsibility towards the institution. In the case of copy trading, I would say that there is you cannot ensure that the person that you're copying is a real professional. So what, in your opinion, are the risks associated with copy trading? Because there might be some psychological risk additionally to the traditional volatility risk, etc.
So first, over time, we've actually realized that we as a platform, and when you actually copy people today on the eToro platform, it is a part of our portfolio management license, right? So the same way that somebody would give you a mandate at UBS, our customers actually give us that mandate when they're copying someone. So over time, we've developed a lot of infrastructure. So we have today, out of the 3 million brokerage accounts we have in eToro, we have about 3,000 popular investors. And those are the people who are part of the popular investor program and get paid for being a part of the popular investor program. Now, we've created a lot of infrastructure on how we curate that program, manage that program, and also manage the risk of the program. So as an example, anywhere in the platform where you will actually see the risk, the returns of someone. So you see somebody generated 25% returns last year or the last couple of years, you actually also see their risk score. And the risk score is the volatility of their portfolio, which we calculate every single hour. So as an example of some of these guardrails we've put in for risk management on behalf of our customers, of course, is if you are copying someone, you can't copy people actually with a risk score of more than 8, right? It goes from 1 to 10. Then as our popular investors grow in size, we've created the tiered program where, one, they have to invest their own money. So when you're copying an elite pro, he has to also invest his own money in his account and that grows over time. So this is a real account with his real money. So he's taking his own personal risk on that money. Mm-hmm. Second is the more people grow in the popular investor program from cadet to champion to elite, they actually have to lower the risk profile. So we said, if you manage a lot of money, you actually need to lower your risk profile. And that's something that we monitor and manage on a daily basis. Mm-hmm. So if someone who's an elite or elite pro, their risk score won't go above a certain threshold. And if they do, we might actually stop copying, right? So we created those guardrails. Another part is our team, our popular investor team, who are part of our chief investment office. Mm-hmm. So we have a chief investment office, and part of the team there is managing the popular investor program. And we work together with the popular investors so they define their strategy, they define their risk profile, they define their interest and their background. So you're not copying somebody anonymous. You're copying somebody where eToro has done the KYC, where eToro knows that person and went over and verified their account and the details, etc. And you have full transparency to their track record over time and to their actual portfolio allocation. So if you compare that transparency to a traditional investment manager or investment advisor, we're actually using our technology to create 10x or 100x more transparency, right? Mm-hmm. You usually, in a fund manager, you might not even know what the fund is investing in. Where you have an investment manager, you wouldn't know the performance he's generating for himself or maybe for other clients of his, right? On eToro, everything is transparent, and that creates basically that level of accountability and trust between our customers and the popular investors, which they copy. And just to add one last thing, in order to actually get paid in assets under a copy model on eToro for the top popular investors, they actually certify a CISI investment management certification. Okay. So we actually help them become professional.
I was thinking of the regulators because you are present in various countries with, complex regulators. How did the first react when you presented this model? And second question, when you open a new country, such as, for instance, France, that you recently opened, how does it happen? And what kind of negotiations you have with the local regulators?
First of all, we've always been a regulated financial services firm. So we've always understood the guidelines and principles of regulation. And our biggest market has always been Europe. So we understand MiFID very well and understand how to adapt our technology to current and constantly changing regulations, whether it's around copy trading, whether it's around onboarding customers, whether it's around crypto trading, which obviously is a fast-paced changing regulatory environment. And today, eToro is regulated in Europe in several countries, in the UK, in Australia, in the US, and are now establishing and received their in-principle license in Singapore and in Abu Dhabi in the UAE. And what we've learned is most regulators around the world have generally the same interest, right? So they want to protect consumers. They want to make sure that the companies generally manage the conflict of interest and act on behalf of the customer in a fair and transparent way. And each country would have their own set of regulations around sort of different types of the industry. And then we as a company need to adapt our technology continuously. We have the RegTech team in eToro, RegTech and compliance team. Out of 1,500 people, I think we have about 200 people that actually work for compliance, regulation, RegTech, which is what we call the group that actually is embedding new technologies to adapt to regulations. And when we started copy trading, we started this with a dialogue. So what we've learned, it's always good to have an open dialogue with your regulators and to explain to them what you're working on and how that fits the current infrastructure or the current regulatory environment where, by definition, when you innovate, right, you're bringing something new. So innovating is bringing something new, and regulation usually is dealing with something that happened before. So trying to innovate around the regulatory infrastructure is always best when you actively and proactively are in an open dialogue with the regulators, helping them understand what you're doing and how you're bringing something maybe from other industries in financial services industry into the investment companies industries. And of course, depending on each part of the business, every time we would need to sort of localize or adapt our platform to local regulators' preference.
On your website, it's mentioned that we can do CFD trading, which is different from copy trading. Could you explain to us what it is and what is the interest of trading CFDs?
CFD is a contract for difference. It is considered a complex instrument. So it is a leverage instrument. It's a more complex instrument that meant for more sophisticated users. Just as an example, when I was, I think, about 16, so after trading in capital markets, moving from the Israeli market to the French markets, I started learning about options trading, right? So the exchange-traded options trading in the US. And then I've learned about leverage and the benefits and the risks of leverage. Now, CFDs provide basically a relatively simple way to leverage your funds to basically create a larger position. So you can on eToro with $1,000, so you can deposit $1,000 and decide to buy $1,000 worth of, let's say, Facebook shares. Or you can decide with the same $1,000 to actually use leverage to buy a CFD that's 2 times leveraged to buy $2,000 worth of Facebook shares. Now, this is a derivative, so it's a contract for difference. If Facebook goes up by 5%, your position will go up by 10%. If it goes down by 5%, your position will go down by 10%. So it creates a linear leverage on basically the profit and loss of that position. And both regulation and our platform also dictates an automatic stop loss, which means if you bought with $1,000, $2,000 worth of Facebook shares, if the position will actually lose $500, which is half of your initial investment, it will automatically close, right? Which means 25%, if it goes down by 25%, that position will automatically close.
Okay.
Now, which means it's meant for shorter periods of time, usually, given the volatility of the markets. In a lot of cases, it's also used for hedging a portfolio, right? So if, for example, I have a loan portfolio. I'm a big believer in the stock markets. I believe also you have to have patience in the stock markets and invest for long periods of time. I'm also, though, a bit of a trader. So I like to short-term trade in my portfolio from time to time. And as I looked at 2022, I had concerns about, and still do, about the fact that interest rates are rising and that potentially there could be a significant drop in the markets, which surprisingly hasn't happened yet. And therefore, I decided I want to actually take a part of my portfolio and short NASDAQ and S&P to protect the rest of my portfolio if it goes down. So in complex instruments, derivatives, leverage trading usually enables you to either take short-term opportunities with leverage or hedge your portfolio. But it is by definition also a riskier asset and is meant for people who are more sophisticated.
Okay, thank you very much. You described a little bit the way you launched eToro, and it was really insightful. I was interested to know more about the platform and the way you expanded the platform throughout the world, because you mentioned so many different countries. So how would you describe the scaling of eToro? How did you organize yourself? I'm always interested also from a pure operational perspective, the decision that you take either to centralize some functions in Israel or to decentralize. So what approach did you have? And how do you conduct the expansion journey?
When we started, we were one of the only, the term fintech didn't exist in 2007. So we were one of the very few online companies in the financial services investing space. This was really just the beginning, right? So when you think of 16 years ago, remember, this was also the beginning of Facebook and Twitter. So it's not that surprising. Most online, there weren't a lot of large scale online brokers, especially not that are global, right? You had local ones in local countries, but very few global ones. And initially our approach was very much a performance marketing approach. So we said, let's build the platform. Let's start market the platform in a lot of jurisdictions at the same time. And let's see where do we see the maximum amount of actually customers coming into the platform. So our approach was a very much sort of, where is the place where the product that we have built has the maximum product market fit. So when we spend money on marketing, customers actually come and become good customers of eToro, which is very non-intuitive, especially for companies from large countries, right? So if you're from Germany, you would usually focus on the German clients first. If you're in the US, you would usually focus on US customers first. And as you focus on customers from your country, sometimes it becomes very hard to actually then expand your business outside of the country. eToro, because we are in Israel, and we've never actually targeted Israeli customers because Israel is a small country. We've always looked at the global opportunity, and it also was a part of our vision. So our vision has always been to simplify and to open the global markets for people from all around the world, right? Because I believed as a young individual, right? When I was younger, I thought maybe like you, I would work in a large bank one day, and I wanted access to information. I knew information is what you need to beat the markets. And I said, I wanted to be a phone call away or, a desk away from people who are experts in Japan or Australia or Singapore or Germany or France or the US. eToro is a social network. I realized we want to bring in global connectivity into the platform. And then as we started scaling the platform, we realized that Europe has become our biggest market. It still is. So Europe and the UK are what we consider our home market. And we were very much lucky to also enjoy a harmonized financial services regulation in Europe. So this was also MiFID across Europe, across its different regimes, building, enabling companies from one country to another, passporting their services. And there are a lot of today, if just outside my office in Israel, you'd see a group of 20 people talking Italian and 20 people talking French and 20 people talking Arabic and a team of Germans and Spanish people. So we're lucky to, in Israel, have a lot of people from all around the world to be able to help us sort of localize and expand eToro in many regions, in many languages. And then gradually we looked at beyond Europe. So we started with Asia and built our presence in Australia, Southeast Asia, through Singapore. US for us is relatively a new market. So we just launched less than 2 years ago equities trading in the US. And just 6 months ago, we launched options trading, exchange traded options trading in the US. So for us, US is a new market. And we've been expanding into the Middle East, as I mentioned before, through the UAE. So again, our focus continues to be eventually building a global fintech platform where people from all around the world can collaborate with one another and can actually see and learn from one another and then copy the most successful investors from all around the world.
And from a pure build-up strategy, because you performed some acquisition, correct? So what is your build-up strategy and which country do you favor the most?
You can't favor one country over another. I'm going to have eTorians who are the eToro employees listening in, so I can't tell you what's my favorite country. But I generally say we are very big believers in Europe, despite sort of, GDP growth, slowness, etc. I think there's a huge opportunity in Europe for retail investors. I think what we've seen in the US with expansion of retail investing in 2020 and 2021 still haven't really scaled at size in Europe, because it's quite interesting that when you think of traditional markets in Europe, it's still almost every country thinks their capital markets, right? So you go to an investment advisor in Spain, he would understand the local Spanish stock market, and he won't necessarily talk to you about the US stock markets or the German stocks markets. And I think all in all, for Gen Y, and then I'll expand it for Europe and beyond as well, I believe that, Gen Y, I'm the oldest of Gen Y, was born 1981, but I think Gen Y and Gen Z generally, right? And sometimes people are in spirit Gen Y and maybe they're older, have the same preferences on the fact that they're interested in the global markets. And sometimes it's a US market, and sometimes it's crypto, and sometimes it's maybe a French company or a German company. And they expect to be able to access everything around the world in the same simple and intuitive interface, right? You wouldn't expect to go to Google and for Google to only bring you information from the US.
Yes.
And you wouldn't expect for your friends from another country not being able to connect you on Facebook. And I think the same eventually is true for investing. I want to learn, I actually even need to learn more from my friends who live in different countries than the ones who live in my country, because I have probably a lot of information on my country and my country's stock market. But if I want to learn how to invest in French stock markets or German stock markets, I need smart people who are actually interested and read the French news in French and the German news in German in order for me to be able to get access and high quality access to high quality information in those markets. So it has always been our ability to help people navigate and connect with people from different countries. And that's also how we looked at the expansion, right? So we understand US markets are the biggest capital markets in the world, which is why we need the US presence and the US office also enabling us to connect to US companies.
Thank you very much. I wanted to start a little bit on your equity story, because you raised funds, you raised equity and debt. Could you please go through this equity story and explain to us the last rounds and what is the intention with, because you raised a lot of funds. I wanted to understand deeper what's behind those huge funding rounds.
I'll start with the first and I'll go to the last. Our first round of financing was $1.7 million at $5 million valuation when we started eToro. Our last round of financing that was closed in February this year was $250 million at a $3.5 million valuation. The company is profitable and has quite a significant balance sheet. So we have a very strong balance sheet and are both profitable and cash flow positive. So our view has always been, and this is something that my father taught me when I was relatively young. I was also very lucky that my father was a CEO and founder of a Nasdaq listed company, to learn from him and to get his insights about the markets. But he had this sentence when I was growing up, and he said, "You raise money when you can and how much you can, not when you want and how much you want." And it's a very interesting insight, I think, for entrepreneurs to understand that there are cycles in markets, and it is always important. I say it to entrepreneurs: there's only one reason for a company to close, and that is it ran out of money. Exactly. The most important thing a CEO and a founder needs to make sure is, of course, he has the vision, the long-term vision of what he wants to do and where he wants to take the company, and that he makes sure that company is always financially stable to enable the company to progress towards that vision over time. And our vision at eToro is very big. We're managing today over $7.5 billion of our customers from all around the world. And I would like to see that number grow 10x, continue to grow and grow to $75 billion and then beyond. And in order to build a regulated financial institution that helps people make their investments in various markets, you need to make sure you have a strong balance sheet and you know how to basically manage the company at profitable scale and continuously also scale your balance sheet.
Okay, correct. One last question about the equity story is that I read in the newspapers that there was a SPAC deal canceled last year. Are you exploring an IPO?
We started the SPAC process at the peak of the market. Actually, saw a huge opportunity. And sometimes, it's important to learn about capital markets and see what happens in capital markets. So we actually raised $900 billion at a $10 billion valuation. This was March 2021. And throughout the process, I think, we've seen somewhat of the growth tech / fintech public companies valuations significantly go down, and realized that this is not the right route and time for us to go public, because actually mid last year when we terminated the SPAC process probably was, the worst of where you look at sort of the downturn of the bear market we came into, right? And I think right now there's still uncertainty. We still see that large cap companies are absorbing more and more of the value in the S&P 500 index, right? So there's 10 companies which are only 42%, and smaller companies, mid-cap companies are still trading at less attractive valuations. So the IPO market, while it boomed in 2021, it's still very much slow now in 2023. And I think we got a great opportunity to continue and scale the business as a private company and come to the markets to become public again when the time is right and when the company is suited to its next phase of growth as a public company.
Perfect. Two last questions. So what are your next steps at eToro?
I think that, we've always been adapting technology, and as new technologies came in, whether it's the move from desktop to we were the first web trader, from web trader to a mobile app, introducing Bitcoin as the first regulated company in Europe to actually introduce Bitcoin trading in 2013, and talking about the tokenization of assets and colored coins in 2014. We introduced machine learning based portfolios in 2017 and 18. So we were very early on to machine learning and AI, and obviously to blockchain technology and digital assets. And I think today, when I look at the markets, I think AI is a paradigm shift in how people are going to interact with the markets. I think that suddenly the computational power that is in the reach of our customers, because of suddenly, AI level computational power on the cloud, whether it's on Azure or whether it's on others, that suddenly opens up a whole new set of product and abilities that we can enable our customers to manage their portfolios in a more efficient way. And we're going to devote more and more time to understand how can we utilize these tools? How can we utilize, this amazing advancement in AI to simplify, to continue with our vision, to simplify access to the global markets, and to simplify also the data insights and the investment decisions for our customers with, I would say, what is the holy grail of anyone in the investing business, which is really generating alpha and really generating the right investment decisions with our customers. And I think those tools are so advanced today that if you look, I used to say at eToro that a hedge fund manager access to information in 2023, right, or in 2018 suddenly, and the access of a 16-year-old to information is almost the same. It used to be very, very different, right? If you didn't have Bloomberg 15 years ago, there's a huge asymmetry with a hedge fund manager or an investment manager. Today, with the tools and information on the internet, a 16-year-old, a 21-year-old can actually, with his tools and abilities, can have access to more information than maybe one of the top hedge fund managers in the world. But now we are suddenly seeing the same thing happening in computational power and AI tools. The largest, best investors in the world are quantitative traders that are taking opportunities with huge computational power combined with huge amounts of information. Suddenly, we're able, through technology, to enable our customers to gain both huge amounts of data, insights, and information, and combine that with tools that use computational power and AI that didn't exist 6 months ago. So I think that's the next frontier in helping people become better and more successful investors. And I'm very excited about things we're seeing sort of today in closed rooms in eToro experimenting.
Perfect. As a conclusion, I always ask my guest book recommendation. So what is your book recommendation?
I would say two things. One related to the last one, to the discussion on AI. Maybe the book that as a young person sort of created a tent in the way I think is 1984. And I think that's an important book to read for young individuals who understand technology and are interested in technology, but also understand we need to always remember that technology can also be used for bad things. And I think that's a great book to show you that, we think technology brings us to utopia, but let's make sure all the people that are leading this change that it doesn't take us to dystopia. So that's a great book that's more sci-fi, which is my favorite sort of non-business book. And in business, I would highly recommend 0 to 1 from Peter Thiel. I think that's a great book for entrepreneurs, for people who want to understand, the magic of what is 0 to 1. It's going from zero. It's building something and innovating one and taking it from 0 to 1. And then you have the process of taking something from 1 to 100. So I think it's a great book for founders, for entrepreneurs, for people in technology to get it from the founder of PayPal. And I'll just say one more book. Sorry, you asked for one. I'm giving 3 is The Intelligent Investor by Benjamin Graham. So I was very lucky to have dinner with Warren Buffett. At the end of the dinner, I asked him, what would you recommend for our investors if they want to become successful investors on eToro? And he said a very simple thing. He said, you should tell them to read The Intelligent Investor by Benjamin Graham. That's how I became the investor I am today. And everything written there is still true. And that's what they need to read. So how can I argue with the oracle from Ola?
Clearly. Thank you very much. That was great, insightful. Thank you for your time.
Thank you very much.
Thank you all for listening and sharing this moment with us. Don't hesitate to contact me on Twitter or LinkedIn to share your comments and reactions. You can also rate this episode on your favorite podcast platform. See you soon.